Well, good afternoon, ladies and gentlemen, and thank you for the opportunity to present our business at ATEC. Qupital is a leading lending platform for e-commerce merchants. We use big data, machine learning, and predictive analytics to automate the loan approval process and to monitor the performance of our borrowers. Now, why are we in this space? While many e-commerce merchants are young, growing companies, it is very difficult for them to get financing from traditional options such as banks, as they don't have fixed assets like property or equipment to pledge as collateral. What they do have instead is numerous amounts of data, from the e-commerce platforms such as Amazon and eBay to payment gateways and logistics providers. This allows us to create a new financing option for these merchants as well as a new fixed income asset class. Our advantages are that we are very fast. It only takes 3 working days from loan application to loan drawdown. We use a data-driven and objective approach, and we are also integrated within the e-commerce ecosystem, partnering with leading payment gateways such as WorldFirst, Lian Pay, Ping Pong, and Airwallex, and logistics providers such as Winnet and Zhongteng. We are in a very large and rapidly expanding market. Cross-border e-commerce in China has been growing at 20% year on year. We estimate that our potential loan book size can grow to over 100 billion US dollars. I would also like to share that in the first quarter of 2021 alone, Amazon onboarded over 300,000 new merchants, with 70% coming from China. In our e-commerce lending model, we have lent out over 200 million US dollars. Our credit control has been stellar, with a cumulative default rate of only 0.03%. Our big data storage has over 2 billion rows of transaction data from our machine learning models. This slide shows our financing flows. With Qupital providing financing to the e-commerce merchant borrower on the top right-hand corner, then they move their goods through the logistics providers onto the e-commerce platforms into the hands of the consumers. The consumers then pay the e-commerce platforms into the payment gateway and back to us. Our credit model has 6 main advantages. Firstly, it is real time. Instead of just looking at financial statements, which could be 12 months out of date, we're looking at real-time data from the e-commerce platforms, payment gateways, and logistics providers. This gives us a deeper insight into the performance of our borrowers. Secondly, we use third-party data. One of the difficulties of dealing with SME lending is the fraud risk. Instead of relying on information provided by the borrower, which could be tampered with or fraudulent, we rely on third-party data provided by their platforms and our payment partners to greatly reduce our fraud risk. Thirdly, our model is highly quantitative, without subjective human biases. Also, our data is easily digitalized, allowing significant automation in the whole loan approval process and the post-loan monitoring. Big data is the key to our continuous improvement, as our large data sets allow us to keep learning and improving our credit model through technology. Finally, our credit model is very scalable. After starting with Amazon merchants, we now also serve eBay, Shopee, and Lazada merchants as well. This is because the data pull from different platforms is in a similar format. We have tremendous opportunity to continue our growth, as there are many platforms we have yet to integrate with and partners we can continue to work with. We currently have offices in Hong Kong, Shanghai, Shenzhen, with 5 more cities to expand into this year. These are our amazing investors and partners. We are honored to work with leading investors such as Alibaba Entrepreneurs Fund, Mindworks, and Gobi Partners. The founding team consists of myself and my partner, Winston. Winston's background is in trade finance, and my background is in software engineering. We saw a huge opportunity to create a trade financing platform for small, medium companies, as we believe they have been historically underserved and have huge potential for growth given the correct financing solutions. Our current revenue run rate is 5 million US dollars annually, and we project to triple that number to 15 million US dollars by the end of this year. Thank you for listening, and please feel free to let us know if you have any questions.
Thank you very much, Andy. Now let's open the questions to the floor. We will have 8 minutes Q&A.
Thanks, Andy. Can you talk a bit about the algorithms you guys use to manage your credit risk?
So we use different time series algorithms. We're using data from the e-commerce platforms, such as the volatility of their goods, the stock keeping units, pricing, also how much is in the warehouse in terms of inventory volumes, and also the return rates or the cancellation rates. all of this is factored into our machine learning models, which will predict the future performance and operational of these e-commerce merchants, as well as data from the logistics partners and payment gateways as well to cross-verify the information.
Right. So do you mean that you have a time series you triangulate for future, I guess, more time series data or predictions, and you apply, let's say, a threshold on that?
Yeah, we will try to predict their future sales, their profit margins, and their net income. And then using that, we will be able to give a suitable loan for them that they can repay over 1 to 6 months.
Right. And so is this simply, I guess, a regression, or is it, I don't know, like a neural network? What kind of future prediction approaches do you guys use?
We primarily use Monte Carlo simulation.
Okay, thanks.
Thanks for the presentation. Can you just talk us through the regulatory framework that you're operating under? And I'm particularly interested in what type of regulatory evolution you expect to see in China.
So our Chinese offices are only consultancy offices. They are there to find e-commerce merchants. All of these e-commerce merchants have Hong Kong subsidiaries, and we are working under the Hong Kong Moneylenders Ordinance. So we only lend to Hong Kong businesses in US dollars and Hong Kong dollars.
But I just write on that questions that because all these e-commerce companies that has a huge market in China, but the requirements that the data they stored in China cannot be really freely transferred to Hong Kong, and also so far as I know, all these e-commerce companies also offer similar products like small amount of consumer loans. So how do you think they will share this data with you to enable your kind of credit assessment process?
So with our partners, such as the payment gateways and the logistics providers, we sign tri-party agreements between the borrowers, the partner, and ourselves to share their data with us. And then on the e-commerce platforms, all these e-commerce platforms, they rely on third-party developers to create many solutions for them, such as ERPs, accounting software, also labeling and packaging, and then also financing options. So we are actually the official financing partner for eBay in Hong Kong, and then we are an authorized developer on Amazon. So we are able to continually grab data on a daily basis from these platforms without hassle.
Your security on these transactions, you've got lien against the goods themselves, also the company. Can you tell me a little bit about what your security is?
Sorry, you were a little quiet.
So are you collecting? I'm sorry. So your security on these loans, so does the payments go back to the company and then they pay you? Like what's the structure of the repayment?
For the repayment on a regular occurrence is that the payment goes back to these borrowers and then they pay us through a bank transfer. But if there's any issues or we believe there's a potential for default or there is existing overdue, we can redirect all their payments from their payment gateway level and into our bank account. So we have the tri-party agreement with the payment gateways to set up that whole structure.
Can you say something about what kind of rates you're getting versus consumer credit rates?
So we are charging.
Are you able to?
Sorry?
Yeah, basically relative to if they use the credit card? Like, how much cheaper are you?
We're charging around 15% per annum on our loans. But our credit limits can go much higher than consumer loans or credit cards. We are on average lending out $300,000 US per borrower, up to certain limits over $2 million US.
And then how are you funding yourselves, and what sort of capital requirements are you subject to?
So we are currently pivoting our funding model. So right now we're funded through family offices and private credit funds. But our next stage is we have a finalized term sheet from a global investment bank. And then the capital requirements for that would be under the EU securitization guidelines. And we require 5% equity capital into the structure.
I have more of a comment and a question. I like the fact that you guys are connected to, let's say, Amazon and eBay, and I think that helps in terms of getting credible and quality data. But then do bear in mind that aside from those platforms, you can still use the blockchain, right, to secure quality and trustworthy data, although it takes time to develop that. So just one comment.
Correct.
We have time for one more question.
You mentioned that you're currently working with merchants in Hong Kong, but I noticed from your slide you do have office set up like mainly in mainland China and in Indonesia. Can you tell us a little bit about whether you have any expansion plan to go beyond Hong Kong?
Yes, so 99% of our borrowers are headquartered in mainland China, but they have subsidiaries in Hong Kong, which we finance in Hong Kong. So our offices in mainland China are sales representative offices. We are only there to engage with the CFOs and the founders of these e-commerce merchants, and then we can finance their Hong Kong subsidiary. With our future plans in 2022, we'll look beyond China into Southeast Asia, as the e-commerce ecosystem is growing rapidly over there as well, and we'd like to capture the expansion in countries such as Indonesia and Malaysia.
Sorry, one more question. So the funds or the loan you provided are in Hong Kong, but not in China, right?
We provide US dollar funding to their Hong Kong subsidiary, and then they have a re-export purchase and sales agreement to transfer the money back onshore into China to pay their suppliers, such as their manufacturers and factories. So it's a standard re-export model.
Okay, Andy, thank you very much for this presentation and great Q&A. You will now be moved to another breakout room where you will have a quick debrief with one of our colleagues. And from our side, we'll have a quick break to debrief the presentations that we have just seen. Thank you very much. Have a good afternoon.